Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today is Wednesday, April 3rd, 2024. We had ADP Employment come out today, a lot higher than expected. This is how many people got jobs, basically. Last month, the rating was 155,000. It was expected to be the same, and in fact, it was a lot higher than expected. Now, the joke with the ADP employment numbers is we got 184,000 new jobs, and I got 6,000 of them, or 10 of them. Basically implying that taking a look at the underemployed numbers, it's pretty clear that these numbers give a little bit of an illusion as to how strong jobs numbers are. Especially just the unemployment rate as well, creeping up now at 3.9, going higher and higher. And so the market saw this as being, hot, and then later on in the day, ISM services came out at a little lower than expected. And I actually have another chart I want to show that, but whenever this number is over 50%, it means there's expansion in the services. And when it's below 50, it means there's contraction. It means that there's actually a decline in ISM services. So that one data point, what does it really mean? These are all of the ISM reports over the last year, and as you can see, this number has been declining, but we've been still in expansion mode. We haven't seen it go below 50 yet. As you can see, the lowest was May at 50.3 points. When we zoom out to a max view of this chart, we can see pretty clearly that as long as we're above 50, we were actually below 50, it looks like, very briefly for 1 month for December 2022. But before that, we're generally never really below 50 except during a major recession like the dot-com bust. We went all the way down to 44.8 in the Great Financial Crisis, which dropped all the way down to a low of 37.8 points. And of course, COVID also dropping down briefly to that 41.7 points. So when we look at 5 years, this, just taking a look at the chart, what does it look like? Does it look like it's going to go sideways or up? It's hard to say. It looks more sideways than anything for now. Again, this is one piece of the puzzle, and if this starts showing weakness, if we dip below 50 at the same time as unemployment continues to rise, combined with a stock sell-off perhaps happening in the very near future, it's all evidence of recession, maybe a bad recession. I've heard people talk about, Lynn Alden talks about this whole decade that because of the expansion of money supply, she thinks that if we have a recession, it'll be mild, and she's expecting spikes of inflation. That's how she described it, and it has to do with the fact that the government has been spending so much money, and there's so much more money in the system that it takes a long time for that to, get into the system before it's not having an inflationary effect anymore. And that's what she sees going on. She was previously an engineer, and so like an aerospace engineer, and so as far as being able to understand charts and data goes, it's worth paying attention to her perspectives. I think she is in agreement, though, with the fact that after this increase, this massive increase of government spending ends, once it is all, and once it's had its full effect, we're still in sort of a disinflation deflation mode just because of mostly demographics being an aging population. Moving on, big headline today that I thought was notable. Fed Powell emphasizes need for more evidence that inflation is easing before cutting rates. And how can you argue with that? You know, when inflation is still above this 2% target, which I actually recently heard another, while I was driving, heard on the radio. Somehow I came across this interview. It sounded like it was live just a few days ago. Him talking about how he was really he's still in the mindset, and they are still in the mindset of bringing inflation down to 2%. Because I've been curious about that. Ever since post-COVID, they talked about having an average of 2% inflation over time. There's been people arguing, well, that just means nothing. You know, they're just going to let inflation be higher for longer and not care. But he seems to actually care, and it seems like they do want to actually bring it down to 2%. And so, yeah, until there's more stronger evidence of economic weakness, higher unemployment numbers, lower inflation ratings, lower CPI all over the place, until that's more evident, there's not an actual real reason to cut. And in fact, cutting too early is also not a good thing. And, you know, when I look into the crystal ball, you know, the Fed typically is late. They follow what happens, and they're behind what happens. But that's just how it has always been. If they try to front run something, it tends to get out of control. And that, I think, it was evident with how much inflation had happened, you know, when they lowered rates down to zero and bought infinite amounts of bonds, you know, before seeing necessarily, you know, any chaos. Think about COVID, you know, was anybody, you know, losing their houses and their jobs and their businesses? Like, no, money became free. Oh, honestly, a little too quickly, in my personal opinion. Maybe that sounds awful, but, you know, the business cycle needs to flush out bad credit. That's the whole point of it. And, you know, if money is just easy and free for everybody, then, and you know, there's not enough competition, you're going to have economic problems. You have to have a business cycle of expansion and contraction. And we kind of didn't let that happen. Arguably the last 3 cycles since the dot-com bubble. You know, when the dot-com bubble burst and the great financial crisis, you know, the Fed coming in and saving everybody was arguably the wrong thing to do. And there are consequences of that have become pretty evident. If you want to get more deep into that whole subject, you got to watch Euro Dollar University with Jeff Snyder. He's worth listening to. But I digress. Let's move on to the charts. Just quickly on the S&P 500, not much happened today. This looks like, from a charting perspective, from my eye, it looks like a dead cat bounce, going down, a little bit of a bounce, not much of a bounce. I expect this to go down tomorrow. In the Qs, or the NASDAQ, similarly, we had, funny enough, opening lower, closing higher, but overall we've been going sideways. It looks like this is turning over. You know, my crystal ball and Garrett Holloway's crystal ball show this heading down from here. You know, another thing to be reminded of with stock market pricing is that it tends to be priced supposedly about 6 months in advance of what is sort of foreseen by investors. And so, you know, like I've been saying, I'm seeing little touches of more and more weakness, and I think as time goes on, more people will see more evidence of that moving forward. Yes, I can see it. Now, with Fed Chair Powell talking today, giving a bit more of a hawkish tone than expected, we saw a little bit of a change in the Fed funds futures, pricing in a little bit less of a, pretty significant move actually for the June rate decision. You know, just yesterday, we were at 32.7% of no cut chance, and now it's up to 41%. And so we have a rising chance of no cut in June, which can be pretty chaotic. Also, if you don't know about this resource for the Fed funds futures, it's worth checking out on investing.com. These little charts here, I love it. You put your mouse over this little chart, if you can see it, and it gives you a pop-up. I gotta kind of make the thing smaller to see the whole thing, but you can get a pop-up of the history of that target rate of when it was higher and when it was lower. And so, this rate right here is no cut, and as you can see, August, September, November, it was a bit higher, and then it went down to nothing. Basically, we were guaranteeing a cut, back in the end of last year up till January, and then now all of a sudden we're back into the 30-40 range. So it's interesting taking a look at these charts to see where things were, where things are going, where things might be headed as far as probabilities are on the Fed funds futures. I talked about yesterday perhaps a accelerating degrading of the markets. We did not see that. We saw it, but we did see it drop. We saw it drop by 1 point from 63 to 62. Yesterday to the day before was something like a 10-point drop, which was very large. And so, this is still going down. Are we going to get to neutral fear, extreme fear in the near future? Yes, we are. We have some evidence of that. Yes, we are. In the VIX. The VIX, this is not a complete reversal. This showing a opening of a higher than any part of the solid. The solid part of the candle is a little bit more important than the wicks. The wicks are just what happened during the day. On a red candle, we opened up here, we closed down here. So this is interesting. It looks to me like this VIX could easily keep going higher, which would coincide with more of a market sell-off. Last charts I want to bring up that I found fascinating. Apparently I sold silver at the wrong time, right? If I wanted to get as much money out of it as I could. We had this trend line in the price of silver for a while, and the past 2 days we broke right through this. We ripped right through it, and this is a huge green candle here. So the question is, how much higher do we go? My feeling is, you see this bottom in I'll scroll in a little bit, in October, this looking like sort of a head and shoulders like pattern. I could see being a measured move from 20 to 25, so then 25 to 30. I think that we could peak out at 30 here. I'm not willing to take a bet on that because I see bigger risks in the overall market. I'm not interested in taking risks like this at this current time. And if I miss it, if I miss the big silver squeeze, well, too bad for me. Interestingly as well, in copper, this is the last, second to last chart I wanted to point out, another big move higher. Oh, I wanted to mention silver. So what that percentage is that, that's, oh yeah, it's right here. 5% move in 1 day on the price of silver. That's a really big move. You don't often see a move that fast in the price of silver. So I found that to be very interesting. Equally in copper, not equally, but we saw also a pretty big move up in copper miners. the miners and the commodities with copper and silver tend to move pretty similarly. The silver miners SIL also moved about 5% today, 5-6%. Uranium is the last chart I wanted to point out. We also saw a pretty big pop in uranium. And so these metals, it was a good day for metals on not a whole lot of other things. I don't really know exactly what to make of metals popping like this. It could, I mean, these are international markets, so this could be like a world picture more than a United States picture, but, equally it being priced in dollars, we had a move down in the dollar today as well, which definitely helped boost the metals up. So that's all I have for you for today's show. I hope you enjoyed. Thank you very much for watching. Robschild.